Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to be talking about the opening range. The opening range of the today we'll be looking at the hourly charts for Asia, London, Europe, London, and the New York Open, and the importance of understanding the opening range and how you can use that information for your own trading. In terms of aligning yourself potentially with the overall strength of where the banks or the bulk of the large traders are moving the market. So we're looking at the hourly time frame here, and the pink is the first 2 hours. Now we're looking at when I call the opening range, we're looking at the first couple of hours around the open of Asia. We're looking at the first couple of hours around the open of Europe and London. Primarily London, that is the largest market time around and then the London, US, New York overlap. And then we're going to look at a couple of other things: when Asia is exiting the market, when London is exiting the market, and then of course, how that can also be information that you can use when you're trading, depending on where you're at in the globe. So the important part about understanding opening range is that one of the things that you can go back and test for yourself, and we'll look at this on other time frames as well, daily, and how to use the 5-minute chart if you're day trading with that information, or 15-minute, whatever you want to use. But the first 2 hours, how the 80% of the time or more, that opening range can give you an idea of where potentially your buying and selling levels may occur and who is the dominant party in the market, so that you can position yourself hopefully in the direction of that move, or when to re-enter a leg back in the direction of that original line of drive. So if we think about, again, especially in Forex, 60-70% of the market trading is controlled by banks. They need someone else to take the other side of their trading. We need to be able to a way to identify perhaps where they're building their positions, and then align ourselves at one of those supply or demand levels to be able to profit from that move. So again, we're looking at the pink. That's the first 2 hours of Asia. So if we were to say that 80 to 90% of the time, one of those levels is going to hold for that session as one of the extremes for that first 4 or 5 hours. Now, what I mean by that session is until we see Europe and London come on board. So if we're looking, for example, this is just the last few days, August 8th and 9th, 10th. We look at the first couple hours. We're looking at the high and the low, and we see into that third hour. This is just right at the turn of the 24-hour clock, but that's the pre-market. That's when we're looking for the market makers to give us a range. We see that there's a range established. We have a high and a low, and in this particular case, there has been no breakout. Now, a market is always trying to either break out, retest, or reverse. And so we see in this particular case, as Asia, New Zealand come on board, we see that first push upwards outside of that initial range, okay, and then we see how the market then traded in towards the high of that first push. So we did get higher highs, but as you can see, the market did not close higher. And then of course, as we head into the Europe-London Open, we see an inside bar and then a big candle push down. Now, a lot of traders will try to chase that trade, whether depending on which time frame they're on. But what's critical to understand about that is just the range itself. Now, if the market is, a lot of breakout traders would have tried to possibly trade that down to the previous day's low. But again, depending on what time frame you're trading on, the market stayed inside of that range. It made lower lows, lower highs, but the closing price did break out in that 11 o'clock session. And again, we know between 2 a.m. and 5 a.m. 2 a.m. and 5 a.m. New York time, that in a large majority of the cases, and again, do this testing yourself, possibly 80% or greater, the market will form a high or a low for that session. Now, what we see happen here is that on the 11 o'clock hour, we have a low. the 11 o'clock candle, which is the 5 a.m. candle New York time. The 2 a.m. candle formed the high. Now, what's important about that is that if you were trading London, you would want to be looking for an area to, again, sell high. The market stayed in that range, but as the U.S. market opened, they've pulled back now. So if you think of it in terms of supply and demand, the market has come back up to the supply level. It's found more supply, but it's also trapped traders long. And then the market formed another inside bar and came back down. So there's our third opening range going into the U.S. market. And again, we see a breakout if you're trading U.S. And again, I'm just using the hourly bars because the opens of the market using the hourly charts is easy to see. But again, we'll go to the 5-minute chart here in a second, and you'll be able to see that a bit clearer. So just really big important thing to understand with all of that is just that first couple of hours gives us an idea. Now, if you were trading in the early part of Europe, you may have actually traded the break on a shorter time frame. But what's important to know is that opening range can set the tone for the day. Now, I'm just going to go back over that Asia opening range again just to show something, that if we just look at the previous day's price action in terms of highs and lows, that first couple of hours would have given you some direction prior to that, because we see that there's been a breakout. We see that as Asia opened up, this is actually a Monday, so there was a small gap from the open, but as we see Asia has opened in range from Friday's last hour of trade. Okay, the market was out of balance, and what that means is that it closed outside of the range of the previous candle, but then it came back into range, and that means that it was back inside of that previous range. When that happens, there's a high probability that the market will retest a high, which it did. It retested the previous hour's high and then slowly churned its way back up to retest the high, which it didn't find a lot of strength to go too far. It only had a very, very small marginal retest of the high. But again, if we go to that 5-minute chart, we'll scrunch that back down, go back to Monday. We see here, come back to Monday, we see here that the market, again, if we even just throw a 20-period moving average on there, which we'll talk about in one of the other videos, the market found support right as soon as that first couple of hours of market making activity took place, and then slowly traded back up towards the high. Now, in that first 3 hours, be looking again for one of the potential highs or lows to have been established for that session. And then, of course, we go into the yellow, and we can see the market was already slowly making bare legs down. And then, of course, we had a small pullback, breakout pullback. Market's always either trying to break out or pull back and retest. And there we are. We have that, and straight down. And again, we're looking for the market they need to push it at the opening of the session to be able to profit from that order flow activity. And again, we see the same thing into the US session. They need to be able to push that. So they've come back down to that. This is the first 2 hours of London. We see that it's gotten down to the lows, and as the US opens, they've built a long position, tried to retest the breakout of the London Open, but what they've really done is actually come back into the Asian range. So really important, know these ranges, identify them on your chart. Doesn't matter what time frame you're trading. If you're intraday trading, you need to look at this and be aware of it. Now let's just take a little look at the end of day, and again, just even using the monthly, you can see the first couple of days of the month, and we'll get into the daily ones in another video, but we'll just have a quick peek at these first two candles of each month. Can set the tone for where the market might be moving. So again, just remember that's not necessarily the high or the low, but it gives us an idea of one of those holding potentially as a buying or selling extreme for the month. Now, the other side of that, if you know anything about market profile, is that one of the other variations is a range, trading range, which we see similar to here. So the market's made a couple of pushes up and then done the same down, and we get what's called a trading range, and that was just before the Brexit announcement. So important just to understand, you may be able to position yourself into a few days or weeks worth of momentum. The market made 2 pushes down and then did the same attempt up. So go back, take a look at your ranges, use the hourly charts. If you're using your intraday trading, look at those first couple of hours around the opens. It doesn't have to, you decide which time frames work best for you. I've got mine set basically at the Asia Open, the Europe-London Open, and the New York Open. I hope this helps traders. Use the opening range. It's very powerful, and as always, manage the downside. As with any of those time frames, I think the greatest risk you should have with any of them is usually one ATR for that time frame session as a risk, 1R, but you should be looking at least 2 to 3 to 4 times your return. Hope this helps traders. Stay disciplined, stay focused, use the opening ranges, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.